So if you take the FANG fund, the fund which invests predominantly in Facebook, Amazon, Google and Netflix. So this particular fund has done a phenomenal 70-80% return in the last 1 year. If you take Chinese funds, they have done around 36% return. In India, the Nifty has delivered only 7%. If it was an active fund, you would have got about 10-11%. Or you take a Netflix, or even for that matter, you take an Alphabet, which is the parent company of Google. Do we really have any company closer to that size and scale in India? Absolutely no. So if you want to invest in this promising themes of the decade or this century, like these companies which I mentioned, you have the best of that companies in the US. Why that? People used to talk about Tesla when it comes to electric cars, and very recently BYD, which is a Chinese company, has even surpassed Tesla in EV car sales. India has been weak against the dollar in most years, so that has only become a benefit when it comes to global investing. If Indian rupee is down 4% versus US dollar in a particular year, then whatever return you get from the portfolio of the global fund, in addition to that you get this also, which is that additional 4%. Certain funds, there are funds like Parag Parikh Flexi Cap Fund and certain multi-asset funds like DSP Multi-Asset Fund and various other multi-asset funds. They themselves have 5, 10, 20% exposure to global stocks.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
A lot about domestic funds, that is stocks which invest in India and the funds which invest in Indian stocks. So this is something which has been discussed a lot. But there is a lot more to equity investment. Equity investment need not be investing only in Indian stocks. You also have opportunity today to invest in stocks abroad. But if you were to invest directly in stocks abroad, then you will have to pay tax collected at source, that is TCS. And then you will have your capital gains tax and all. And it's also difficult to identify the performing stocks globally. You also have the very popular stocks, the Facebooks, Googles, Netflix, Amazon. These are all very popular. But will you invest, or should you invest only in those names? You would want to have a large basket. You may want to have some mid caps, some small caps, mix of industries, all this. But you will not have the necessary research with you for you to really identify the right basket of stocks. So what do? You can invest in mutual funds in India which invest in global stocks directly, or they invest in global funds as a feeder, which means there will be a fund which invests in various global stocks, and this fund would be domiciled somewhere outside India, and there would be an Indian AMC which will invest in that particular fund itself. So that particular fund which is domiciled outside India does all the research of stocks, picks stocks, and does the necessary churning based on various market conditions. And if it is a sectoral fund there, then it would invest only in that particular sectors. Even there would be various churn required. So this all is done by that global fund, and the investors in India who are invested in that fund continue to get the benefit of this. There is a necessity advantage and a higher return possibility when Indian markets are not doing great. So these are all the advantages you get when you invest in a global fund. For some reasons, various global countries' markets may do well and India may not do well, like exactly the last 1 year. Right from September 2024 till now, most of the global markets are doing well, while India is very flat. The last 1 year return as on 30th October 2025 of the Nifty is only about 7%. But various global indices and global funds have done returns varying from 90% and to around 36% in the last 1 year. So if you take the FANG fund, the fund which invests predominantly in Facebook, Amazon, Google and Netflix. So this particular fund has done a phenomenal 70-80% return in the last 1 year. If you take Chinese funds, they have done around 36% return. In India, the Nifty has delivered only 7%. If it was an active fund, you would have got about 10-11%. So if you had 10, 15, 20% exposure to a basket of various global funds, your overall portfolio return would be better than another person who has the entire money in Indian funds. When I say Indian funds, I mean funds which invest in Indian stocks. What are the other advantages of investing in a global fund? various geopolitical tensions may have different impact on different countries. So in some situations, India may be impacted heavily in the negative side. There might be other countries which may not be shaken so much, okay? And there can be economic situations in various countries which may be very healthy in a particular time frame as compared to India. While in India, we are in a very great phase for the last 5 years, and even the next couple of years look very attractive, and globally funds are investing big time in India, right from the Canadian pension fund which aims to invest in India. Of late, their overall investment has gone up by thrice. Yes, India has a lot of opportunity, but there is also opportunity by investing in other countries. So we gave an example of the last 1 year, how global investing would have increased the portfolio performance. When I say this, you should not presume always a global fund should or is expected to do better than Indian funds. Not necessary. The purpose of having a global fund is diversification. It's geographical diversification, country-wise diversification. When we say diversification across businesses is necessary when you invest in an Indian fund, when you invest in an equity portfolio, it helps to have global diversification. That doesn't mean diversification means the global fund should always deliver better than India, not necessary. And there might be many years where Indian funds may do better than the global fund. This is only to see to that, particularly in a bad market, the other funds, global funds may do better. They may be doing almost in similar lines in some years, but the necessity of having or the advantage of having a global fund in your portfolio is to see to that your portfolio also doesn't get exposed to too much of an Indian kind of a risk. So whatever is the risk associated with Indian market, if India is in a high risk zone in a particular period, your entire money goes through that risk. But 15-20% of the exposure goes into global stocks, that much of risk gets reduced. In India, there are global funds which invest predominantly in US stocks. In fact, the most number of global funds available in India invest in US stocks. Next would be China, a bit of Hong Kong, then Taiwan, then you will have the UK and other countries. But largely in India, the funds available are US focused stock investing funds. Why US? Even globally, if you take investors who invest internationally or foreign portfolio investors who invest internationally, at least 60-70% of their non-domestic investments are done in the US. Because US is such a large market, US has businesses which are larger than the size of many countries, and the businesses which are very successful in US are much larger than the businesses which are available in many countries. So the scale of the businesses in the US is so high. That is how the risk associated actually might be low, but the growth potential might be still very high. For example, if you take Amazon, or you take a Netflix, or even for that matter, you take an Alphabet, which is the parent company of Google. Do we really have any company closer to that size and scale in India? Absolutely no. So if you want to invest in this promising themes of the decade or this century, like these companies which I mentioned, you have the best of that companies in the US. That's why not only in India, even other countries, when they invest out of their country, a bulk of the investment goes into the US because of the opportunity which is available in the US, which is so unique and so rewarding. India, if you see as a part of the overall equity market, global market, India's market cap is less than 5%, right? So the 95% of the equity market globally is outside India. In that, US is a very large part of that market. Then comes China and other markets, right? So these are also reasons why US is something which is dominating in terms of investments done globally. When I talk so much about US, you cannot also discount China as a market. China and US are the largest two markets economies. After US, China is the largest economy, and China is a major manufacturer, particularly in segments like electronics. Even in the new energy area, China is a big player. Why that? What people used to talk about Tesla when it comes to electric cars, and very recently BYD, which is a Chinese company, has even surpassed Tesla in EV car sales. When I say that, the founder and chairman of NVIDIA has very recently told it's not just an EV. even in AI, they anticipate that China might even surpass US in terms of the AI innovation and growth. So this is how China has been giving very tough competition to US in many of the new generation technologies and segments. What are the risks involved when you invest in a global fund? There are risks. One is when it comes to Indians, we might be very under-researched in terms of the global stocks. We may know a lot about Infosys, we may know a lot about Tata Motors, we may know a lot about HDFC Bank or an ICICI Bank in terms of the data available. Today, you may have AI, but still the familiarity and the inside happenings which we know is more about the Indian companies. We may not so much closely know about the global companies. So, lack of information about the global stock as compared to the Indian stock may be a drawback when it comes to execution of whether it is the right time to buy or right time to sell a global fund, right? That is a problem. Then, you have currency risk, but unfortunately, India has been weak against the dollar in most years. So that has only become a benefit when it comes to global investing. If Indian rupee is down 4% versus US dollar in a particular year, then whatever return you get from the portfolio of the global fund, in addition to that, you get this also, which is that additional 4%. So that is an advantage with whatever has been the trend so far. You also have one more disadvantage, which I also would like to call as a small risk when you invest in global funds. All global funds may not be open all the time when you want to invest. The reason is Indian government has restricted investing in global stocks to the AMCs, which is the mutual fund companies, to the extent of $7 billion only, which means overall investments done by Indian mutual funds in global stocks collectively cannot exceed $7 billion US dollar. So this limit given to the overall mutual fund industry has been proportionately allocated to various fund houses. Many of the fund houses have already crossed that ceiling, and so they have closed their global funds for purchase. Only a very few funds or AMCs which have not crossed the ceiling have kept the global fund open for purchase. So in case you are doing an SIP today in a global fund, suddenly if the ceiling is closed, that particular AMC may even stop taking money even through the SIP route. So that is in a way a risk. So if you want to diversify at the same 15-20%, someday that particular fund may be closed. Yes, when I say that, today there is a new opportunity which is emerging in terms of investing in global equities, that is through the GIFT City. In GIFT City, you have something called outbound funds. So far, largely these funds insist you to invest a minimum of $150,000 US dollar as the minimum ticket size. Yes, there is also a change happening there. Many of the funds today have started coming the retail way, where they may take $5,000, $10,000 as the minimum investment, and you can still invest. These investment in global funds through the GIFT City route doesn't have that ceiling of 7 billion USD. So GIFT City funds for now has the freedom to take as much money in these kind of funds. So it's not only the mutual fund route, the GIFT City route also is now opening up for investing in global stocks or the global fund. So you may want to know which is the index global funds follow. A fund which invests across countries may have MSCI index as the index which they benchmark against. If a fund invests only in US stocks and across sectors, they may follow S&P 500 as the benchmark. If a fund invests only in tech stocks, then they may have NASDAQ as the benchmark. So based on the country or based on the basket of countries, the benchmark the fund may follow may differ. How liquid are global funds as compared to domestic funds? Actually, global funds are also equally liquid. You can redeem them at any point of time and liquidate it. The difference is in an Indian fund, if it is an equity fund, you will be able to get your money in 2 days. That is T+2. When you redeem a domestic fund which invests in Indian stocks, if you redeem it before the cutoff on a Monday, you will get the money credited in your account on Wednesday. If it is a global fund, which as I told you, most of the global funds invest in a fund which is available in another country instead of buying stocks directly. So that is called a fund of fund. In Indian fund nomenclature, that's called fund of fund. So these global fund of funds, when you invest and redeem, you may have to wait for 5 working days. So just that, the wait has to be for another 3 days. Otherwise, you can sell it on any day, but for the waiting period, which is more by another 3 days. Should all investors invest in this, or who should invest in this? Very small investors, if you have just 1 lakh, 2 lakh rupees of investment into that, you may not have to take global funds very seriously, or you need not even consider. If your portfolio has 20 lakhs or 25 lakhs of value, then you may look at investing 10-20% of the exposure into global funds. You may not sometimes have to necessarily take exposure into an exclusive global fund. Why? You take certain funds, there are funds like Parag Parikh Flexi Cap Fund and certain multi-asset funds like DSP Multi-Asset Fund and various other multi-asset funds. They themselves have 5, 10, 20% exposure to global stocks. You can also take exposure to global stocks by investing through these funds which have a portion of their money invested in global stocks. So this is also a way. So small investors don't have to take it seriously. 10-25 lakhs of investing or more than that, yes, global stocks is something which will add a lot of meaning to your portfolio. You can even do SIPs, which is a good idea. SIPs in equity of any market is good. That is the best route to do. So you can also consider doing whatever is your, if you have an investment through SIP of 1 lakh every month, then at least 10-15,000 of that can go into global funds. There also you can see to that it goes into a mix of US, China and other countries. Don't only focus on US and invest. So spread it across various geographies and invest. If you feel all this information makes sense and if you are keen to invest in these global funds, or if you want to take exposure to global stocks, please reach out to us and we will help you and suggest you how to do that.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.